What is up, bros? Today we got fair value gaps part 2. In the previous part we talked about how to use fair value gaps for retracement as a retracement confluence. Nothing changed, however, there are inverse fair value gaps which we can use to enter a trade, which I personally use to enter all of my trades. Also, I wanted to talk about a key mistake that people make. For example, they see a price going into fair value gap and they immediately place a limit order inside of it, but it's not enough. A fair value gap is not an entry signal. First, you want a reason for price to move there. Maybe liquidity gets swept, maybe market structure break. Then, when price retraces into the fair value gap, you look for an entry, for an IFVG. So for example, we are in an uptrend. We formed a higher high, higher low, higher high. We're starting to go down. We sweeping this higher low that we placed and bouncing off of fair value gap that was formed while we were forming previous higher high. Bouncing off of this fair value gap, and then we can look for an IFVG. And I'll show you a couple of examples of it. So let's see what happened during yesterday's market open. As you can see, we came down, swept these lows, and came back up into the 30-minute fair value gap. And here is an example of a failed inverse fair value gap. We see a 5-minute IFVG, but does it matter? No, because we are delivering off of 30-minute fair value gap. What fair value gap is more important, a 5-minute fair value gap or a 30-minute fair value gap? Remember, we are trading based on high time frame trend. So right now in this leg we need to find an inversion. And here we are, a 1-minute IFVG. And targeting a 4-hour unfilled fair value gap. As you can see, 1 to 3.5. Let's find another example. Again, look, it was Friday, last Friday's price action. Today is Wednesday, and it was Friday's price action. I'm not making everything up. Just look, I'll show you another example in a minute. 9:30. Boom, liquidity sweep. Then after liquidity sweep, what are we looking for? A key level. Inverse fair value gap in this leg. Boom, 30-second inversion and entrance off of this. Stops around there, targeting here. We could have gone as far as targeting these highs. Boom, a bearish example. We have a 1-hour liquidity sweep. Boom, here is our 3-minute IFPG. Inversion, it's 1042. I wouldn't personally trade 1042 though. I wouldn't, but anyway, here would be a trade. And targeting all the draws. So this one, for example, market open wick, and there. 1 to 3. So guys, this is pretty much it. Fair value gap. I explained IFVGs to you, fair value gaps, how to retrace into them. Fair value gaps we use to retrace. IFVGs we use to enter, or we can look at the big picture. So for example, if we are in a 1-hour bullish trend and we see a 1-hour inversion fair value gap happen, what does this indicate? Change in order flow, which can lead to us going down. So this is pretty much it for the day, full of part, I don't know,